what is happening with interest rates, and like how is it actually going to be impacting our properties, our businesses? Where will rates go next? Just you choose your own adventure, like a Goosebumps book.
Well, let's play tennis. That's probably a good way of doing it, right? Because there's a lot in there. Like, what's happening with interest rates? That's a pretty big question. All right,
I've got it. They're going up.
Yeah, okay. But why are they going up, right? So rewind a little bit. COVID hit. All of the governments kind of panicked a little bit. Responded appropriately. Choose your poison on that one. Pumped heaps of liquidity into the market. That liquidity has either been saved or been spent, but it hasn't been able to keep up with supply chains. Further, we've had further supply chain disruption in Ukraine and China. That's exacerbated issues with people being able to get access to the goods that they want to spend money on, which is driving up the cost of goods everywhere. That's what we call inflation. Inflation is good to a point. When we have too much inflation, that becomes bad because then people can't afford the things that they normally could, and their standard of living goes down, and that makes governments unstable because people don't like governments that make their cost of living bad. So then what the government needs to do to keep things in track is they need to increase interest rates, which decreases people's surplus cash, basically makes it harder for them to be able to buy those really expensive goods and services, which decreases demand for those goods and services, which then decreases inflation and gets everything back into normalcy and keeps us on an even keel. So interest rates are going up as a response to inflation. So that's what's happening with interest rates. If the question is, what do I think is going to happen with interest rates, is that I think they're going to keep going up. Now, I'm going to put a massive caveat on that because a lot of people think interest rates going up, oh my God, this is bad. Oh, bad news, interest rates going up, which is just nonsense. It's just a thing, right? And so you've also got to understand the context of, firstly, why they're going up, right? And then that can allow you to deduce how long will they go up for and what's the likely outcome and all of these kind of things. So if you look back over the last, say, 30, 40 years of interest rates, so firstly, we still, even though they are technically not record low interest rates, because that was like, a year ago or whatever, they're still obscenely low. They're still they're crazy low compared to our historical averages. Like if you go back to sort of, 2009 kind of era, we were up at where were we? We were at about 11% back then, right? So if you go back to that 9 to 11%, even not that long ago, if you go back to the 80s, we were in sort of 17% territory. So we've still got ridiculously low interest rates. Now, if you also look at what has happened over that period of time, interest rates haven't just had a downward trend. They go down, they go up, they go down, they go up, because they're a lever that the RBA can pull in order to control the speed of the economy. That's effectively it, right? Now, interestingly, if you look at what happens when they go up, they don't stay up for that long. They usually only stay up for somewhere between 12 months to 2 years, typically, right? And so in that context, that actually allows you to gain a fresh perspective on what the situation is. So, okay, they're raising interest rates in order to manage inflation. Cool. So when they get a handle on inflation and inflation starts to go down, what are they going to do? Well, that's actually probably going to end up making the economy go a little bit bad. And a lot of people are talking about things like stagflation and recession and all that kind of stuff. We can talk about that another time. But there's all this kind of stuff. And so then what happens is they then need to kind of like ease back on the accelerator a little bit, i.e. drop interest rates again to stimulate more growth. And so we'll probably see a return to normalcy. So from the context of what do I think is going to happen, I think there's still a little way to go with interest rates. Do I care? No, like I'll be really blunt about it. I don't care. And I think that when people are focusing too much on those kind of metrics, it can cause them to make really bad decisions.
So for Australian business owners who are listening to this, right, like there's a lot sort of that you're saying of going, great, well, interest rates are going to go up. And hey, if you're in Melbourne, Sydney and you own your own property, well, happy days. But if you're trying to get in, maybe sort of look at it. How, for Australian business owners who are trying to create wealth in their business, but also personally as investments, how do they play that? Like, how is it going to actually affect it for them, and how do they approach this situation?
It's a great question, right? Because business is more affected by interest rate rises than property, right? So, and we can really dig into this. I'm really passionate about this whole. I've got a lot of research around this whole interest rate affecting property kind of side of things. But the fact of the matter is that interest rates do affect businesses more than they affect property. That's why when interest rates go up, the stock market goes down. Why? Because costs in business increase, margins decrease, and the real value of any asset is based on its current or perceived future cash flows. Really, at the end of the day, that's really where value.
It's been really noticeable for me as well. I will say that it's like and I've mentioned it a few times on the show already. The amount of business owners I've met that it's actually reshaped what they're doing. Like they've stopped expanding their businesses. They've stopped hiring. They are really like pulled to use the analogy you used before, Goose, like they've taken their foot off the accelerator.
Yeah.
Wait till they have the brake on, but they're definitely slowing down.
And the interesting point is that they actually start thinking it's like the pandemic again. Like the knee-jerk reactions that I'm seeing from business owners is almost like, oh, this is like another lockdown version, or like no one's going to be outdoors anymore. Like this is like the reactions that people are seeing in their business.
Yeah, and I think, again, that comes down to perspective and context as well, right? So, because cost of capital is still ridiculously low. Like, the cost of cash out in the marketplace, which is kind of what derives a lot of the, perceived value of business and all of that kind of stuff, is still really, really low. Like, it is still really, really low. So, it depends on what the capital structure is in a business. Go on, Charlie.
I want to ask you this one because you are a business owner as well, right? Yeah. One of the reasons I love having you on here is because you have that business owner perspective, and then also you're in property specifically. From Dashdot's perspective, have you guys noticed any change to inflow to people wanting to buy property or get involved in property? And has it shaped any of your own view on like, hey, I'm going to slow down because of this interest rate rise? I'm going to answer that in two parts. So, have we seen a slowdown in people who want to buy property? Not really. I mean, there's been a little bit this year, but it's been pretty episodic, right? And I think that is largely driven by media hype, right? So we saw when the war in Ukraine kicked off, there was a bit of turbulence. Election, a little bit of turbulence. When interest rates first started rising, bit of turbulence, right? But these kind of periods typically only last about 2 weeks because everyone's got doom fatigue. Everyone's just like they get a bit of like, oh my God, is everything going to crash? Oh wait, hang on a second. They've been saying that for ages. Nothing's been going on. That's me. You've literally just described me. I'm just waiting for the next series of bad news.
Like, come on.
Yeah. Pay attention though, because it only lasts 2 weeks. Pay attention to your. No. I've been watching it really closely. Right, it only lasts 2 weeks. Just watch it next time you hear the bad news thing, whatever it is, because there'll be another one right next week. Right, watch it. People will only be thinking about it, talking about it, and caring about it for 14 days, and I think that's getting shorter. Right, and so. What that's meant for us is that it hasn't really changed for us. And the good thing about what we do is that it is really resilient in terms of a strategy. Like the thesis is built around how do we invest, have all-weather investments that work in kind of any market, any condition. So what we do is uniquely positioned to support people to invest in this environment. And I think that's carrying through. So for us, from a business, we haven't really seen a massive slowdown. What I would say though, and this is kind of, because the other question is kind of like, how am I viewing moving forward as well? I could see a year ago that labour markets were going to tighten up massively. And I could see a year ago that there was going to be some indigestion in the market to some degree. You don't pump that many billions of dollars into. Have you ever had a massive meal where you've just overeaten and then you've gotten a little bit sick afterwards, right? So it's, I kind of expected that we were going to have some kind of indigestion, but who knows what it was. And I kind of expected that at some point it was going to be really hard to build a team as well. So one of the biggest problems business owners face at the moment, and one of the biggest things that's actually restricting their ability to grow, is access to really good people. So we focused really heavily on how do we scale up our team and how do we build an amazing team. So we've actually kind of got the team we need now to take us to the next level through this phase, which is awesome, right? Which is awesome because when I think about what, where we're going over the next 12 months, it's still big, and none of those plans have changed, right? And so we're still going to be growing. We're still roughly, I have downgraded our targets a little bit, but not significantly. And that's probably more of an affect of, as you get closer to what you perceive targets are, you get to see them more clearly and to decide whether they're still realistic or not. So it's probably like a readjustment of perspective as opposed to a readjustment of the market. Do I think that there's potential economic uncertainty? Yeah, for sure. And what does that affect? Consumer confidence. Cool, right? So not blind to it, and I'm not kind of just waiting in there going, yeah, it doesn't matter, like, because it still does. But at the same time, I think that there are ways that people can proactively position themselves to benefit in this market. And the thing is around this as well. It's like when, it is in these moments where business owners get to choose what their next 10 years is going to look like, right?
And that's actually it's a really interesting point to that, because I actually want you to continue riffing off it, because like I was looking at the statistics. Like if you got into business over the last 10 years, interest rates were just going down. Like that's all you know is interest rates going down. And so people are stepping into an environment that they might not necessarily have played in before. Yeah. Or they might have only been in business for a couple of years where they didn't have sort of this view of interest rates and the impact, etc. And so for your view, like fast forwarding that thought over, and this is exactly why I jumped in, you were talking about over the next 10 years, like where's the interest rate going to go in short term? And what does that mean for sort of business owners? Like, so you said it's going to go up. Right. So where to from here? Because it's an environment they really haven't sort of played in before. So look, a couple of things, right? We keep talking about interest rates, but you've also got to really think about what does that actually mean for business owners? Because most business owners, right, most small to medium business owners are largely driven by their sales and their revenue and their cash at bank. Like they're not usually massively leveraged, right? Usually, right? So mostly actually what's affecting business owners right now is the perception of entering into an uncertain environment and potentially the cost of real inflation, right? That's my opinion only, right? But the actual interest rate is probably not the biggest affect on them, right? To your point, it's like, oh, hang on a second, interest rates have only been going down over the last, say, 10 years. They're going up now. I've just entered into it. I'm playing a game that I just don't know what the rules are. So it's not actually the effect of the actual interest rate. It is the perceived, it's the perception of entering into an environment of which they are uncertain, right? And that's what's causing people to take their foot off the accelerator, not put their foot on the brake. They're going, not sure, so I'm just going to slow down a little bit and survey the landscape, which is totally fine and totally cool. So no one's got a crystal ball, Grant. You're asking me to say what are interest rates going to do for the next 10 years. No one's got a crystal ball, right? I do like speculation.
We want you to ask it though, because this is the only way we can get people to click on the episode.
I'll absolutely answer it, right? But here's the thing. Here is the thing, right? The RBA has no idea. No economist has any idea. And no banks have any idea. So all of these people out there saying this is going to happen, or this is going to happen, or this is going to happen, they're all just having a punt, right? If you go and listen, they're all just having a punt, right? And that might sound like, like inflammatory or whatever, but they have no idea, right? They have no idea. I mean, so firstly, I love economics and I have a lot of respect for economists, but I don't think that they're very rarely ever accurate or correct, right? Or it's not massively relevant for how you should be making business decisions, right? And what we've seen over the last 5-10 years is that systematically they all get it wrong anyway. So where is it going to go? So my observations around where I think that is going to go, barring major external events, like for example, let's say we had a war with China, right? That would be a major external event. Don't know, right? Not sure, right? But if all things being equal, based on looking at the economics or there's other kind of things, inflation, looking at the spot price of shipping containers and the cost of microprocessors and all of these other kind of things, which I am actually looking at on a regular basis to try and work out what the hell's going on. My viewpoint is that interest rates are probably going to rise. I don't know. Are they going to rise to the end of the year? Maybe to a little bit. I'm not really sure, right? But we're going to have elevated interest rates to some degree for probably 18 months, something like that. Maybe closer to 2 years, but only around that kind of mark. I don't think it's going to be really, very, really long. I just don't. I think it's quite possible that interest rates will start to drop in 2023, maybe towards the end of 2023. I really don't think it's going to be very, very long, and I think that that's a really interesting thing for other people to be thinking about as well, because I'm not the only one that thinks like that either. Like, go and look at what Ray Dalio is saying. He's saying basically the same thing. There's like loads of people out there who are way smarter than me, right, who have formed their own opinions, which are correlated with my opinions and the same kind of ideas. And it's like, I don't see this as being a major thing. And I think that, because what I think is going to happen is interest rates are going to go up. They're going to manage to put the brakes on inflation. They're probably going to put the brakes on a little bit hard, right? Then we're going to have some economic uncertainty. Then they're going to have to drop interest rates in order to kickstart the economy again, and then we're going to start charging ahead. Now, geopolitical stuff in and around that, I mean, that could change everything, right? But that's my view on it. So people shouldn't be making decisions based on what is the interest rate doing today. They should be making decisions based on, particularly in business and in property, they should be making decisions based on, the health of their activities. Like, is my business, am I making decisions based around making sure my business is profitable and serving my clients well? You should be making good business decisions, not reading the paper and saying, "Oh, interest rates are going up, therefore I'm not going to grow my business," or "Therefore I'm not going to buy a property." Because even in real estate investing, right, it is literally the same thing. It's like if interest rates are really low and you're banking on them being really, really low, it's kind of like having a tech stock, right? If you could go and buy. You could go and buy really expensive, really low yielding real estate, which doesn't produce any cash flow, i.e. a really expensive market like Sydney, right? But then guess what happens when interest rates turn, right? That whole kind of construct gets haywire because everyone starts panicking because the cost of capital becomes too high. Same thing's happening with tech stocks, like non-profitable tech stocks, right? So the businesses that hold the value and the businesses that are the best businesses to own if you're a shareholder, the businesses that are the best businesses to run if you're a business owner, and the real estate that is the best businesses to own if you're a property investor is businesses and assets and investments that make money. It's that simple, right? And it doesn't matter. I will say this really clearly. Like, I'm not going to mince my words. It does not matter how much debt you have or what the interest rate is if your asset produces more income than it uses. It just doesn't matter. And so people just need to start decoupling their thinking from the whole interest rate discussion, because it shouldn't be the driver.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.